Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 21st of August. All right, after a week hiatus, I'm back on deck and just having a look at the sort of global markets and where the currencies are. I haven't missed that much. Okay, if anything, the dollar continues to sort of edge towards the top side. Mixed data out of Europe and the UK, Australia and New Zealand sort of still really probably struggling out of the most of the currencies. So just having a look, and you can learn a lot from what you read from the news services, particularly on Monday. Now, dollar gains intact as China disappoints. Some trade numbers. Traders Eye, Jackson Hole, right? There's a Jackson Hole symposium. You get all the finance ministers, etc., together, central bankers in Jackson's Hole. It's more of a junket. Don't expect anything dramatic out of that. They'll be sort of just, shaking hands and working out who's doing a good job. Now, just look at the global markets, right? And look for the raw nerve. And when I say that is, so looking at the North American equity futures or the equities, there's one that stands out here, right? And the NASDAQ, it's up 30% compared to a lot of these other ones, 11% for the S&P Mini, the Dow Jones up about 4%. And so it's around there. So that's the one to watch, right? Because if the NASDAQ starts to fall dramatically, well, it's going to impact the others. That's the big mover there. You have a look down here through, obviously, the Asian equities. Nikkei's up, 21% compared to a lot of the others that haven't really moved. Hang Seng's minus 10%, right? So what I'm saying is basically it's a time to, when there's not much happening, have a look through and just see where there's things completely out of balance, because that's where you could see the biggest correction. Okay, and like dollar ZAR up 11.6%. Just having a flick through here, the yen 10.9. The rest of them, all pretty much the same, except for euro, right? This thing has just sort of frozen up. Now, if we just have a look across the board before I sort of get into looking at this week's data, the equity markets, well, overall, they are still sort of moving up. It has broken through this short term, well, actually, that's the daily chart. So through some levels here, but we've got some other support levels below. And to me, the NASDAQ is the key one to look at. Euro, well, it's heading up. No one really wants to take it on just yet because we haven't had absolutely convincing US numbers or Euro numbers to sort of really push it back down to, say, towards 105. But so that keeps it in the game. Same as the dollar index. Obviously, Euro is 58% of that basket. So you'd expect the dollar to be looking like it's going to go up as the euro looks like it's going down. Gold finally breaking back down below 1900. I can see further weakness there. And, well, I'll tell you what, oil, very resilient, just around that $80 level. And cryptos or Bitcoin just sort of cruising along, but just sort of dipping a little bit lower. On the major currencies, right, just looking at the daily charts, okay, get the overall perspective. I've already covered the euro and the dollar index. Now, dollar Swiss, mirror image of the dollar index and opposite to the euro, right? So what I'm looking for when I look at the charts like this and I see, okay, sterling has been going up, now drifting sideways, Aussie down, Kiwi down, dollar CAD up, and dollar yen up, right? So I'm looking for defining things that I can get a tangible handle on. Now, I'll be asking myself, why isn't the dollar, right? If I just clear the screen there, what's holding this thing back, right? The euro, dollar index, and dollar Swiss. Well, as I said, we haven't had like uniform data where either the euro data is working with the US dollar. And what I mean by that is we either get really strong US numbers and weak euro and vice versa. So, but if we do get strong US numbers and also weaker euro numbers, then we start to get that push, that trend move. Now, if I just bring over the this week's data, just looking at trading economics. Now, I've got this set for second tier data and the high impacting numbers, the top tier numbers. If you have a look through here, right, there's not much on Monday. Okay, you get some new house price data there out of Canada, but you come through, and if I just scroll down, let me just take the pen off. There's a bunch of US numbers here out on Tuesday. There's the S&P composite numbers, manufacturing numbers, new home sales Wednesday. Thursday, we got durable goods. And then you got Powell talking on Friday, probably ahead of the Jackson Hole Symposium, right? So this week, we've got a lot of second-tier data coming out of the US. These are the building blocks for the trends, not just the CPI numbers and the employment numbers. So to me, if we can get some uniformity across the US numbers here, okay, even by Tuesday, then roll that into Thursday or Wednesday's numbers, and then Thursday, we could start to see a decent move evolve out of this week, which otherwise looks a little bit lackluster. These are the weeks where you do get the second, third tier data adding up. It's the straw that breaks the camel's back. Now, in amongst that, there are some good numbers here, some German manufacturing numbers, Canadian retail sales, and obviously the US durable goods numbers there as well, right? So piece it together. Don't just go in and start trading thinking, oh, well, I'll just trade because it's that time of the week. These German GDP growth numbers and the German IFO numbers on Friday, to me, I wish they were coming out Tuesday, Wednesday, because these are good historical numbers that do start to see the market correct if there is some sort of variance there. All right. So as I said, the Jackson Hole Symposium, don't worry about that, right? The media services will only talk about this if there's nothing else going on. They'll be talking about, oh, yeah, we're going to wait for this, this meeting. Like you go back into the early 90s, 90 to 95, there used to be massive announcements at the end of these meetings, and all the financial markets would move dramatically. That doesn't happen anymore, right? If anything, as I said, they're giving themselves a pat in the back, and we'll see how that plays out. So just follow the data as you go through each trading session. The US numbers, to me, are the key to it because, as I said, we've got a couple of instruments here, the dollar index, obviously, euro, and a little bit of sterling's got a long way to correct itself. And dollar Swiss, right? I'm looking for potential breaks or a move back into the trend. And, well, Aussie and Kiwi, the stronger US numbers there will keep these things moving to the downside, and dollar CAD to the top side. That's pretty much it. The market's pretty quiet about this dollar yen being up around 145. Is it time for the Bank of Japan to come out? I don't think so. I think you'll see them come out when they're under pressure up towards 150, right? That initial jawboning they did some months ago is, has really sort of dissipated, right? So they need to take it to the next step, which is obviously giving the market sort of clear numbers and going from there. Now, actually, just while I'm on this, just give you a look at these risk reversals because they are giving us some sort of update. Obviously, Aussie calls versus puts. I'll tell you what, puts are winning out right there. So they are still expecting a lower Aussie. When you click on the euro, it's a little bit lower. Okay, the market is expecting euro to drift lower, but not as dramatically, obviously, as the Aussie and Kiwi. Sterling, on the other hand, it's sort of really leveled out. So pressure on the sterling to go up or down at this point is really dissipated. Look at something like the Kiwi, and obviously same as the Aussie dollar, lower, right? Now, this is one of the things that I'll just sort of finish on is it's really I find it not weird but unsettling when I see the euro sterling. Well, let me get off that. These four bottom pairs, euro, sterling, Aussie, Kiwi, right? They're all obviously quoted the same way against the US dollar. It's a little bit disheartening when they're not working almost pip for pip, 95% of the time euro and sterling will be the same and Aussie and Kiwi, but 80% outside of that, they should all be moving the same way, right? And I know we've got this little dip here. That's great. Aussie and Kiwi, if anything, are leading the charge. So just to summarize all of that, I'm sort of waiting, looking at these key levels, particularly dollar Swiss, dollar index, and euro, probably the best pairs to be focusing on for me. And we'll see how the rest of the instruments play out, especially as we go through this week. It may look like there's nothing much on, but these are the weeks where things can add up and we start to see a bit of a slide, right? But what we do need is we need the numbers, especially on the dollar, to start moving. Oh, on the wrong screen. We need these numbers to start moving around a bit. And so keep an eye on these as you go through the week. US numbers are the key to it at this point, pretty much like as per usual. All right, guys, going to be back on deck. Any questions, fire us a message in the Discord and we'll go from there. Good luck. Cheerio.